The following is a presentation of TFNN.
11 seconds. You got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhoses.
Good morning from TFNN. Welcome to the March 31st marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call your self-appreciation inventory. You know, yeah, I'm speaking directly to you. You are a tremendous success. You are already a tremendous success in many ways, and it's important to take time to appreciate what you've accomplished on the path to becoming all that you can be. Each of us, folks, I do mean each of us, needs to take a self-appreciation inventory from time to time. Start by asking yourself a question, because questions, they control our focus. And ask, what have I achieved in the last 7 days? What have I achieved in the last 2 weeks, 6 months, during the last year? And, of course, what have I achieved during the last 10 years? That's right, the last 2 weeks, the last 7 days, the last 6 months, the last year, the last 10 years. Start writing those things down on a pad of paper. Just jot down a few of them that come to mind. There's no right or wrong answer out here. You want to have that self-appreciation inventory. Why? Because I can promise you one thing. The universe, from time to time, is going to throw you a curveball. Maybe even a fastball. It's going to throw you a pitch. It's going to throw you for a loop. In fact, is today the opening day of Is baseball get started today? I know it's sometime this week. If it's not today out there, talk about throwing your pitches out there. So I want you to, when those pitches come across the plate, and maybe you go ahead and you swing with all your might, and you take a strike or what have you. What I want you to be able to do is I want you to be able to turn over to that phone of yours or your memo pad, whatever you use for a pad, and immediately go to your self-appreciation inventory. Write those answers down and take your self-appreciation today. Let me ask you this question. Have you accomplished all that you set out to do? The uncanny thing is that most people can answer this question quicker and easier than coming up with a list of their self-appreciation inventory items out there. It's because some of us are so busy trying to reach our goals, we haven't taken the time to sit back and reflect upon what it is that we've achieved. Boy, I tell you, nothing can make you feel better than knowing what it is that you've achieved thus far. And as long as you're breathing, as long as they're not throwing dirt in your face, you can always achieve more. So when you actually spend a few moments to write things down and to reflect upon that, you're likely to be more amazed at just simply how much you've grown. That's really important, especially when you get thrown that curveball. And the real power of that smartphone is that memo pad. So use that memo pad. Write down your self-appreciation inventory. Look at it each day. I mean, how many times do you look at your phone? Make sure you're using that phone of yours, that tool of yours, to really get you in the right frame of mind, because building personal success, folks, it happens one step at a time, 1 day at a time, 1 week at a time. Yes, you, and I am speaking to you. You are a tremendous success. Take a moment and celebrate. Take a moment and absolutely celebrate, folks. Let's go check out the celebration in the markets out here as we speak right now. We've seen this play before. Right now, we've got, and when I talk about the play, we see these rallies in the morning. We've seen some sell-offs in the afternoon. We'll see what today is going to bring about, with it being the last day of the month out here. Right now, as we begin our trading session here, we've got Dow futures up 87 points. They're trading out at 16,327. S&P futures up nearly 11 points. They're trading out at about 1861. NASDAQ futures up nearly 25 points, trading at 3587. Russell 2000 up about 10 points, trading at 1156. King dollar back 9 pennies, trading out at 8024. Goldilocks back $2, no big deal, trading at 1291. You've got silver up 6 pennies. It's trading out at 1985. Light sweet crude back 19 pennies right now, trading out at 101.47. Our call number is 877 927-6648. Let's take a quick peek across the globe out here, see what we've got going on. Not much of a party over in Europe this morning out here. The DAX is up 0.3% right now. It's up 29 points. The FTSE is up 21 points. It's up 0.3% as well. Over in Asia last night, you had the Nikkei up nearly 1%, up 132 points. The Hang Seng up about 0.4%, up 85. And the Shanghai off 0.4%. It closed down 8. So where do we begin our day? First of all, I hope everybody out there had a great weekend. And let's look forward to a great week together out here. Where do we begin? Well, let's begin. So futures are up this morning, and maybe you're asking yourself the question, "Hey, why? Why are futures up this morning?" Well, if we go check in on our friend, your friend and mine, if we go check in on the euro yen out here, that's really the picture. If we took a look at last Friday, so as futures, as we had when we opened up last Friday, we saw the market moved higher nicely, and as it was doing that, what we saw was and I'm looking at now, if you're watching us on TigerTV, or take a look at the euro Japanese yen currency pair, you're looking at the 120-minute chart out here. And what it did as it was making this price relative strength divergent pattern, this was taking place at 5 a.m. This is a 2-hour chart that we're looking at, and this was on Friday. You had that nice big bullish engulfing candle session that took place, obviously, next candle session by 7. Follow through on the very next session. The market continued moving higher. Now, we saw our markets here move higher, then go ahead and give back some of those gains, still close up for the session. But the question would be, with regard to the give back of that rally, was it the rally that was fake, or was it the give back of the rally that was fake? That's really the question out there, isn't it? And the answer was, if we would take a look at the euro Japanese yen, what it was telling us is, hey, you boys and girls in the stock market, go ahead and do whatever you want, but I'm going to go ahead and motor on higher. And that's exactly what we saw took place here, because it never really backed off. It just simply had moved towards an overbought condition and went ahead and just simply moved sideways. And then what did it do here? At about 5 o'clock this morning, again 5 a.m. seems to be the appropriate time here for the euro-Japanese yen to get to work. It started moving higher. We had a nice wide-ranging bar that took place here at 9 as we came into the 9 o'clock session. Or 7 o'clock session, I should say, this morning. Wide-ranging bars. Markets don't end on wide-ranging bars. It's now made the 0.618 retracement with that wide-ranging bar. What does that mean? It says, hey, likely to go up to the 142.96. Now, that doesn't mean we've got a real battle here between the bulls and the bears out there. And that doesn't, and if you take a look at the euro-Japanese yen, it is absolutely inside a overbought condition out here. But the key question is, how do those overbought or oversold conditions get worked off? And that's really the key out here, because as they get worked off by just simply traveling sideways out there, what you're going to see is it's just a market that's like it's been running a race out here. And it has been a race. And so it's been running a race, and it just wants to take a breather, catch its breath before it continues to move higher. So that's what's going on the intraday chart. Now, we can also see as this 142.97-ish area gets hit as the market. So that means what we should see here this morning, we should see the markets move even higher here during the first half hour. I can't tell you how many minutes, but it's likely that we'll see the markets move higher. And as they do that, the question is going to be what happens to our friend here, the euro-Japanese yen. Is it going to just simply move up to the 142.97 level and then run into resistance where it last saw resistance? That was 11 o'clock in the morning, and that was on March the 13th. Seems like nearly several weeks ago, because it was out there. So we'll see. That's going to be a real resistance area. That's what's going on the intraday chart here for the euro-Japanese yen. If we go ahead, we take a look at the longer-term chart. Let's go see and we want to understand what's going on with this currency pair, because until it becomes not the carry trade, until this decouples from the market, we always want to be taking a look at it on the monthly chart out here. If you go from the swing point high out here on July of 2008 down to the swing point low in July 2012 out there, you'll see that it's had a nice move up, a nice rising price channel that it's in. We saw one bearish reversal signal. That was a bearish engulfing candle. That was the month here of January. But you can see that price has now fought its way back. It continues to fight its way back. That's on the monthly chart out here for the euro yen. If we take a look at the weekly chart, one of the things that we're going to see, if you're watching us on Tiger TV, this red or horizontal line going across my screen, that was an area of resistance. That resistance has now become what? It has become new support out here. With that becoming new support, how do I know that? Because we saw a breakout above that area. Price came back and tested that the week of January 31st. It said, no, I don't think so. It's moved out of there. Now, has it moved out of there with conviction and moved to higher price? No. But it has rejected an important area of support. Look, this market is only going to really possibly croak if we start to see the Euro-Japanese yen get back inside the lower part of its range. That is back below the red line out there. You might say, hey, where's the red line? Look, you've got to be able to move it a little bit here. I'd have to say right around the 134.10-ish. We'll just call 134 even Steven range. Right now you're trading at 142. Let's go to Pete in Long Island. Pete, thanks for calling. Thanks for holding. How you doing this morning?
Good morning, Steve. I'm doing well, except today's the beginning of the baseball season.
And
I have tickets for the Mets game, but the conditions aren't good. It's snowing here in New York this morning.
No, really?
No exaggeration. Well, we woke up on Long Island here, and it's been snowing. We have accumulations of perhaps 2 to 3 inches, and the weatherman, never made any reference to it last night. So I don't know if we're going to have a baseball game or a snowball fight at Citi
Oh my
Field.
God! Yeah, I think you're right. I think a snowball fight's going to break out at the game.
I have box seats. Opening day. I wish you could join me here. You would have fun in the snow.
I wish I could. Now those box seats, they must come with those must have seat warmers on them, don't they?
Well, at this time of the year, you need them.
Absolutely.
How's the weather in Florida? Make us jealous.
Yeah, it's beautiful. It's absolutely beautiful. I think I don't know if the Marlins play today or the Rays. Well, the Rays play indoors, so not a big deal. But no snow. I'm able to report to you down here,
Wow.
Pete, in Florida.
Listen,
You want to take a look at the S&P 500? Tell me what I can do, how I can help you.
You answered that question. I pretty much in the past few minutes. I wanted to ask you on the metals.
Yes.
Okay. Platinum is doing very well right now today. And I wanted to ask your opinion on silver and gold. What direction you see in those two metals.
Yeah, Pete, as we speak here right now with regard to gold, it looks like now what gold has done here, and we have to be careful. Gold is formed on a weekly chart. That's what I've got on my screen here. So a weekly chart is going to give us a better indication as to what may be going on longer term. Now, the weekly chart in gold formed a 0.786 Gartley sell pattern. That pattern was confirmed the week ended here on March 21st. It did it with a bearish engulfing candle, did a key reversal session out here, and it says at a minimum there's always 5 outcomes of any Gartley pattern. And outcome number 1 was achieved. That was to pull back to 1311. That's your dead cat bounce, your 0.382. It looks like it's headed to its next area, its second outcome, which is 1262. We haven't seen any sign of a reversal, whether it's on a daily basis as we speak right now. So it looks like about 1262 is its next target. If that fails, we ought to see gold move all the way back down to about the 1226 level. But we got to play this just like a baseball, one pitch at a time, one day at a time, as we take a look at Goldilocks. I hope that helps you out there.
Thank you, Stephen. Have a nice day. Enjoy
Absolutely. You
the
do
sun.
as well. That was
Bye.
Pete in Long Island, New York. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and to all you folks going out for opening day games out there, have a be safe out there. Nice to see spring supposedly really kicking off here. I remember going and catching a game in the old Met Stadium, Shea Stadium. Kind of fond of Shea Stadium, just simply because my oldest daughter, that's what we named her, Shea. And but I do remember being out there in even the summertime, and that wind can get whipping at night and be pretty cold out there. So in any event, let's go back and check out these markets out here. Pete from Long Island was asking about silver as well. So you mentioned silver and platinum. Let's take a quick peek and see what silver is doing. Right now it's trading out at $19.82. Now what silver has done thus far, let's take a look at the real retracement here. And that real retracement I'm referring to is coming all the way back into the low that was formed out here back on December 31st. Silver $18.72 all the way up to the high put in on February 24th out at $22.18. What we've seen since then is a pullback to nearly the 0.618 or 786 retracement level. 1946 would be that number. We've seen the low put in here a couple trading sessions ago back on the 27th. That low out there of 1957. We've not seen any kind of reversal since then. So, silver is the weakest index out here. Silver is the weaker of the metals. So really it's from weakness where we're going to find out if there's any strength. Because if we can see the weak link here, right, you're only, the expression, you're only as strong as your weakest link out here. And that's why we like to you like to really categorize what it is that we look at as we are looking for clues. Because we're always looking for clues as to, hey, what does the market really want to do here? So from silver, if we were to see a reversal in silver out here, that might give us a clue as to what gold's next move might be out here. But at this stage, we have not seen that. What does that mean? Hey, testing 1946 would be an option. The red, what do I want to call it? The rectangle. Thank you. I knew there's a symbol out there. The red rectangular box on my screen, if you're watching this on Tiger TV, that's a consolidation range that silver had broken out of. And now it's come back into that consolidation. And the importance here, unlike as we were taking a look at when I opened up the show, we're looking at the euro-yen. The difference here, see, the euro-yen came down and it tested the top of a resistance level. And a consolidation, the top of a consolidation should also be resistance. And the problem here with regard to silver, the interesting pattern is that it broke out with conviction, wide-ranging bar, volume, the whole 9 yards. That was back on February 14th. But it came back into the consolidation on March 20th, and it's never gotten back out. And when you get back into a consolidation, it says you can easily run all the way back down to the bottom. That is the nature of those patterns. Does it mean that's how it plays out? No, but it is something that we have to absolutely be paying attention to. It most certainly is. And we want to do that because it's the weak link out here, right? It's able to reject this and just simply make it. Now, it's made an A to B equals CD to the downside here. If we take a look at that, the A point being that high on February 24th, the B point being the low on March the 10th, the C point being the high on March 14th. So what it's made a 1 to 1.272 A to B equals CD. But the move down on this C to D leg, stronger than that A to B leg, even as we speak here right now today. And that's what sets up a move down, making the 1 to 1.618 A to B equals CD on the way down. That's about 1925. And as Vic can get down there, might as well go test the bottom of the consolidation box. So that's what's going on inside of silver. We go back, and now we haven't taken a look at the indexes here. We ought to do that. Let's go take a look at the so speaking of weak links, right, let's go take a look at the NASDAQ. So let's see what the NASDAQ here is doing on a 120-minute chart. So NASDAQ on 120-minute chart here right now, it is trading at 35.89, right about 35.86 is a real key level of resistance that it's trying to get above. Now, this is a 120-minute chart. That means that this doesn't end here. Looks like this chart here that's ended at 8 o'clock? No, that's not right. What am I looking at here? That's strange. Let me switch over to a different package just to make sure that I've got the right thing here. So let me just, sorry about that. Let's switch over here and take a look at the NASDAQ futures. Yeah, so it's traded 35.89 out here. Now, what it has done thus far, let's take a look at the retracements. Let's take a look at two levels of retracements because this is going to be key. Let's take a look at the A to B equals CD to the downside. A 1 to 1.272 is what it formed. Just the dead cat bounce alone takes you to 36.13. You're at 35.89. So that's another, 11, 13, another 24 points out there just to make the dead cat bounce. That would be normal. If it starts getting above that level, then you're looking at a potential larger bounce that would be in place. So that's of the entire move of the A to B equals CD to the downside. If we just take a look and measure the C to D leg out here, that C to D leg still hasn't even made the 0.382 of that move out here, which is at 36.03. So at a minimum, we ought to see the 36.03 level hit. I'd say 36.03 to 36.13 before we get our next real piece of information. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 110 points. Trade out at 16,431. S&P up 13. Trade at 1870 and change. The NASDAQ Composite up 35 points. It's leading the charge, the upside out here. That's important for us to be watching the NASDAQ. Remember, we're only as strong as our weakest link, and the NASDAQ is the weak link out here. So we'll see if it's the bear trap or the bull trap with the bears hanging out overhead. It's up 35 points. Trade out at 4190. Russell 2000 also has been a weak link out here, so it's important to be watching that. The IWM, the Qs. We'll take a look at those during the next hour and a half out here. Russell 2000 trading out at 11.59. Apple's up $1.76. Google is up about $13 right now, leading the charge. The upside, we've got VIP Shop Holdings. VIPS is its ticker symbol. It's just behind Google. It's up $10, about 7%, so a nice move there. Amazon up 2% this morning, up $6 and change. Biogen, BIIB, getting a nice bounce here this morning, up about $5. Kihu 360 Technologies up $4.51. Netflix up $3. Novartis up $3. Baidu up $3. Amgen up $2.50. Tesla up a couple of bucks. To the downside, we've got Prana Biotech. Oh, my goodness. Talk about getting just simply nailed out here. PRAN is the ticker symbol out here. Let's go check in on Prana Biotech. It's down 69% out here. Looks like they are results of their Phase 2 Imagine trial for Alzheimer's disease. Look like maybe that did not come out that well. Let's go see, man. We'll talk about a huge gap down. Let's take a look, see if we can figure out where this is trading into. Now, this thing had this did have a nice sign of strength back here on February 18th. It had pretty good volume, looks like about 25 million shares out here to the upside, but it's well below that. I want to talk about A to B equals CD down pattern. This thing is taking out the B point with volume out here. Of course, this one's a doozy, but if we do take a look at that pattern, let's put that into play. Now, for those of you that are normal listeners here at TFNN, just integrating a number of different charting packages and tools out here. Come on, work for me now. Oh, that's real nice. I was trying to integrate this in there. There we go. There's my B point. And now what it's a little bit easier here because for those of you trying to learn the A to B equals CD points, I've got things. If you're watching us on TigerTV, which is a great way to learn, a great way to watch us out here, you'll see the A point out here. And this stock was at $13.29. That was on January 30th. Again, that was the swing point high that we're using. You can see that this moves down into a level on February 14th, gets down to a low of, $6 and a penny. $6 move. That's pretty big on a stock trading at $13.29. Right, it gets cut in half. Makes a retracement. Now that retracement looks like it made about 83% retracement. So we round that off to about the 0.786. And the C to D leg now, you're down below the 1 to 1.272. That says that this thing from an A to B equals CD wants to get down to about $2.17. Talk about a major haircut out here. And if we put this on a weekly time frame, let me try to do that on a weekly time frame, see if this thing's got any support anywhere. This is coming all the way back, looks like all the way back to this to the swing point low out here, right around, well, it should be coming back to probably the highs out here from the week of July 1st, 2013, right around 2 ounce at trading at there right now, $2.97. If it doesn't like that, if it doesn't reject that area, $2.31. That is a stinger. Hope nobody out there is a holder of this equity because it is not pretty out here. And that's that's part of what goes with these owning some of these biotech companies out here. We've got methane. Let me see, what is this equity here to the downside? Only off a couple of percent. You've got Methanix Corp. MEOH is a ticker symbol. It's down $1.57. Not a lot really to the downside out here, dollar-wise, really what I'm referring to. You got Green Mountain Coffee Roasters. It's down about, $1.92. So not a ton at all to the downside out here, dollar-wise. So no real damage out there. Let's go take a look at... VIP Shop Holdings. VIPS is the ticker symbol. Let's get an idea for where this thing is moving to on its daily chart. We know that this had a real nice, huge sign of strength out here. That was on the trading session of March the 4th. Volume on that trading session for this equity here was 7.3 million shares. Pulled back, pulled back into, this thing here. This has pulled back into the, close the gap, pulled back into the breakout area. Let's see what kind of volume we've got in this equity. So this had a little bit of, this really has not had any volume to speak of off of the highs. It's a really good looking equity as it came back to the gap. Now, remember, oftentimes you hear some of us discuss gaps and gaps getting filled. It's really the same thing as coming back into a breakout area. Because if you were to go ahead on VIP Shop Holdings, you see the gap here from March the 3rd to the following session on March the 4th there. What you need to do is, you visually need to do this, which is fill in the blank. That means color in that candle out there. Because if you saw that as a wide-ranging bar, that would tell you've got wide-ranging bar, as well as, so you got accelerated price, and now what this thing all did, it did not come back to the bottom, in essence, of that session, which would have been from March the 3rd, but it did test the high of February 28th out there. Volume-wise in this equity here right now, so far today, about 255,000 shares, which is not too bad. Now, it's going to have to, in order to really form an A to B equals CD, it's going to have to take on that real high volume day. So pretty good chance that right now what this is in is a bit of a trading range. Anywhere from the lows out here at about 131.50 all the way to the highs out here. It's a pretty good trading range, right? The high is 182. So that is a pretty nice trading range. That is on VIP shops out there. Let's see, what else do we have moving here? You've got Google. That's trading out at $11.29. It's up about $9 and change right now. Let's go see what Google is doing or trading into. So Google, we take a look at this. This has completed a 1-2 A to B equals CD to the downside. It did that here last Thursday. The 8-point on Google started out at $1226.99. That was the high of March the 7th. It makes a run down to a low about a week later, March 14th. Makes that low, makes a retracement, about a 72% retracement, so we'll call it between 61.8, 72.6. That formed the C point, and then just a straight line move down into March 27th, into Thursday, it looks like, of last week. As it was getting down there, the low that it formed was 11.02. 11.0308 would have been your 1-2 A to B equals CD. An entire 108 points to the downside was the move out here inside of Google. Now, if you own the art of timing the trade charts, you do a 1-2, you're likely going to do something different. In this case here, it is. It moves sideways on Friday. Today it's moving a bit higher. Where is this likely to find some resistance out here? About 1177. So if you were long in Google or you're using Google as one of the stocks here to pay attention to what's going on inside the NASDAQ, what we're going to really want to watch is what happens to Google as it gets into a resistance area right around the 1177 mark out there. Right now it's trading out at 11, what does it look? Looks like about 1129.77. That's what's going on with Google. Let's check out, let's go take a look, because this is the month end out here. And so far, let's take a look at some monthly charts just to get a feel for what's really going on. So let's paint the picture of different time frames out here. So let's put up our, we'll start here with this chart. Let's start off by taking a look at the S&P 500. So let's delve into the S&P 500, and then let's go delve into the NASDAQ. So we've got a tale of two pictures out here. And let's start with the monthly chart for the S&P 500. So on the monthly chart for the S&P 500, the question is, can we find anything that is bearish out here? Other than trying to use some type of pattern tool to call the actual top tick out here, is there anything that is bearish about this monthly chart that we're looking at if you're watching us on Tiger TV? And the answer to that question is absolutely not. The only bearish thing that was inside on a monthly chart inside the S&P 500 took place on Monday. Took place on January. What the heck am I thinking? Took place on January, the month of January. And that formed a bear sash candle. That's an important candle. That's a strong bearish reversal signal, but it immediately gave it up the very following month, the month of February. Now, any kind of resistance should have been the high of either the bear sash or the prior candles that it had sashed, so to speak, out there. That high was 1850.84. You're trading 1869.23 right now. You're above resistance. There is nothing bearish about the S&P 500. If we were to close right here, right now, that candle, it's not a doji. It has no absolute meaning out there if you're going to go ahead and use Japanese candlestick charting. Japanese candlestick charting, if you're going to use Japanese candlestick charting as part of your messages in order to be able to give you the message of the markets, it's really important that you use candlesticks properly. So in this case here, just kind of what they might call a spinning top. It's got no absolute meaning. The only meaning on the chart out here on the monthly basis would be that bear sash candle out here, and we've established at this point at 9:44 in the morning on March 31st that price is above that resistance level. If we take a look at what's the weekly chart tell us inside the S&P 500, weekly chart tells us a different message, right? Things are going to turn on different time frames, right? A 30-minute chart is going to give you a turn in the market before a 120-minute wheel, before a daily wheel, before a weekly, before a monthly. Monthly says, but however, you'll also go in reverse order because you want to understand, hey, what is the trend out here? Because the trend is going to be more controlled by the larger time frames. And those are the little nuances of the markets that we trade and the messages that we get. Nonetheless, we want to pay attention to all. Well, we had the week of March 14th, 2014 out here. We had another bear sash candle form as we saw price moving higher on less relative strength. That was important. However, the following week, meaning the week ended March 21st, it basically erased the meaning of that bear sash candle. There was no follow through to the downside. It doesn't eliminate the pattern. It just tells us that, hey, the bears had the opportunity when they formed this at this week here, March the 14th, they really had the opportunity to push lower, and they could not do it. They couldn't even get below the 8-day exponential moving average out here. So how bearish is that? Not very bearish when we take a look at the S&P 500. However, on a weekly chart, what you really need to see in order to get excited from a bullish standpoint is you're going to need to see it close above the high of the week of March 7th out there, and that's at 1883.57. You're at 1869. If you were to see that, then we'd finally see the market start to break out. And maybe it only breaks out through the month of April and takes us into the sell in May cycle out here. But right now, that's really where your resistance area is. You know, I don't know about you. If you are a golfer out there, maybe you like to watch the game of golf on occasions, if you maybe just the Masters tournament or something out there. But, folks, if you ever played the game of golf, depending on what level you're at, and it actually doesn't even matter what level you're at, how good is it to par a hole? How good is it to par 2 holes? How about 18 holes? If you could play golf and you could par 18 holes, how would that make you feel? PDG, right? Pretty darn good. Now, if you're a scratch golfer, maybe shooting par is just so-so out there, right? Look, when you take a look at playing the game of golf, par just basically means you did what you were supposed to. In trading, it's the same thing as being invested in cash out there. So if par was acceptable to you, what I also want you to understand that from time to time, especially when you have a market that is consolidating sideways, that cash is a position. Cash is a trade. It's like playing the game of golf out there. You come away, it's everything that you wanted to achieve. You see, the entire outcome is to put your money at risk when you can establish some type of trend. Otherwise, what you have to do is you've got to be some type of intraday trader inside of the marketplace out here. And we know just by taking a look at the last week, the last 10 days, whatever the time period has been, we've had markets that have risen in the morning. They've been nothing. They've been met with selling. Now, look, that's not a real great bullish thing. So no matter what it is that we take a look at on the monthly chart out here where you've got intraday rallies only to be given up, that's not exactly what you want to see from being a bull out here. So I just really want to point that out because I think that always linking the known to the unknown makes it a little bit easier to understand what's going on in the market. There's many people out there that for some reason believe that your money has to be invested at all times in the marketplace, that your money's not working for you if it's not invested. And I just say, for those of you that believe that, the question is, have you ever played the game of golf out there? Because shooting par is a pretty good feeling. I can tell you, I've only broken par twice. Now, I'm the type of person that counts every single one of my strokes. That's the game. So I know when I've really broken par that I actually did it. And so shooting par, and so shooting par is a great thing. In any event, let's move on. You don't want to hear about my golf stories, I don't think, out there. If we do take a look at the daily chart out here, what's the message on the daily chart? Well, there's your message. Nothing but consolidating. Consolidating up at the highs out here. We've been consolidating at these highs, easily you could argue, for over a month now, since February 21st out there. So it means other than playing intraday moves up to the top, down to the bottom out here, now it's a pretty decent consolidation level out here. But that consolidation, the top of the consolidation, is really set up by, we'll call this high from March 21st at 1883.97 level. Again, you're trading at 1869 right now. So there's nothing really bearish about this. There's nothing hugely bullish about this as well, because we're just trading inside the consolidation. Now, the bullish side of this would be you're consolidating up at the high. So that's on the S&P 500. When we get back, let's go take a look at the NASDAQ composite, or maybe let's take a look at the NDX 100. Let's do that instead, since that is directly linked to the Qs out here. Right now, we've got the Dow. It is up about 111 points. The S&P is up 11 out here. XAU back a quarter. Composite up 29. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We've got the Dow up 138 right now, S&P up 14, Composite up 36 points. Had a request to go take a look at Mercado Libre. MELE is the ticker symbol out here. They host online e-commerce platforms in Latin America. It is trading right now at $94.55. It's down about $1.73. We take a look at the weekly chart, the daily chart here from Mercado Libre. What we can see is a real nice little sign of strength. And if I pull this back a little bit further, Let me do this here. Mercado Libre, as we can see, has really struggled. We've seen some volume off of the highs out here. That first volume off of the high took place back on November 6, 2013. Volume there was about 3.2 million shares to the downside. And big, huge gap up there. That gap has not been tested. Goes ahead and continues to move down and makes a low out here. Makes a low back on the trading session of February 25th. The low out there was $87.88. Comes out with earnings here. Looks like the earnings report came out after the close on February 27th out here. Looks like they did about 93 cents a share. And that was after making the 52-month low. So it makes the 52-month low. How about the 52-week low? Makes the 52-week low back there on that trading session of February 25th. And then a nice sign of strength. So this thing has had a sign of strength off of the bottom, and that took place here on the trading session of February 28th. Now, what it's done here as it's pulled back, so it creates that little gap. It has closed the gap. It's pulled back in there. It's finding some support right around the $90.38 range. You're trading right now at $94.67. So if one were daring and thought that this was this sign, what you'd like to see is another sign of strength, right? So this thing here, you'd like to see it come back around the $90.38 mark. That's if somebody was looking to play this to the upside out here. What you'd like to see is another sign of strength out there, and that would be holding that $90.38 range. You really want to see it get above $97.88. I would have to say until it clears the $97.88 mark here, this thing is it's not worth a trade really in either direction. If you want to trade to the short side, let it close below $90.38. So that's what's going on with Mercado Libre. Let's go check out, I mentioned, let's take a quick peek here at what's going on inside of the NDX 100. If we take a look at the NDX 100 here on a daily basis, right now you're trading at 36.06. So we've seen a fairly nice move out here. Actually, if you get a close today, I would have to say a close today above 36.26, and the bulls are going to really try to push the market higher. Not just today, obviously they need to do that, but it looks like they would try to push the market higher and do a little bit deeper retracement. Coming off of the highs back here from the trading session of March the 6th out there. But that's really what's needed on a daily basis in order for the NDX 100 to get some legs out there. If we take a look at the monthly chart, so the tale of two stories, whereas the S&P 500 did not look bearish. Oh, hey, guess what? The NDX 100 on the monthly chart, it too does not look bearish. Not even close to bearish when we take a look at a monthly chart for the NDX 100. You're seeing one of these little kind of pause-ish type of buttons here. Take a look at on the monthly chart. Each time we've seen one of these, we've seen the market actually take off topside the very following month. So on a monthly chart out here for the NDX 100, there's not anything you can find that's bearish about it. If we take a look at the weekly chart, well, the weekly chart, a little bit of a different story, and it does have a confirmed price relative strength divergent pattern. Had that bear sash candle out here, and that was the week of March 14th. They had a little doji candle and follow through to the downside last week, March 28th. It's got its work cut out for it. In order to really get bullish inside the weekly chart, you're going to need to see it close above 37, 38, 32. Folks, have a marvelous Monday, and thanks so much for joining us. Look forward to seeing you bright and early tomorrow morning, or in about 8 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.